Good evening. I am Sudarshan Sukhani and today is February 24, 2022, Thursday. This is about 9 p.m. in the evening when I am recording this video. In this video, we talk about the Indian stock markets, focusing mainly on the movement of the NSE 50, which is often called the Nifty. The Nifty is the primary index that represents the largest possible, broadest movement of the market, and it is the most widely followed index in India and abroad. So we talk about the Nifty, and that of course tells us the broad sense of the market also. Today was an unusual day. Most viewers know it. The Nifty fell dramatically, with lot of drama. It opened 550 points lower, so that was about a 3% direct opening gap on the downside. And then during the day it fell another almost 1.5–2% from that opening gap, closing somewhere around 16,250 versus 17,050 yesterday. So an 800 point decline on an index which was yesterday at 17,050, almost 5%, just a little less than 5%. Sorry, it's as large a decline as possible. So naturally, we are curious, all of us, to know what happens next. Now, there are a few points I want to make. First of all, no one can, forecast the markets. We can only make a best judgment of what is possible, and that best judgment is based on the environment today. Since we do not know the future, it's a silly idea to think we can forecast what will happen tomorrow, the day after, or the day after that. It's not possible. Only people who pretend and behave that they know everything do these forecasts. I know nothing of the markets, in the sense I know something, but the markets are much bigger than what I know. So we do not forecast the markets. What is the current scenario? The current scenario is that the Nifty has responded aggressively on the downside to the news that is pouring in. The news is coming in different forms and fashion. First, it came because the US markets decided to raise, the Fed decided to raise interest rates. Then the news came that the Ukraine issue is now hotting up, and eventually today the Russian forces have invaded Ukraine, or entered Ukraine, whatever you like, you can say, and that caused a major decline in India. The theme here is this: we are falling on news. When a market starts falling on news, it tells us that the market was ready to fall anyway. If this was not the news, we would have fallen on some other news. Doesn't matter. So this is not about the Ukraine war. It is about the fact that the Nifty was strongly overbought, which means weak buyers had purchased a lot of shares, and there was a strong likelihood that a shakeout would occur. So this is not about the war, it's about the fact that a correction was inevitable, and the news actually just became an excuse for that correction. That's the first point. So forget about the war. This correction will stop when buying comes in. The war can continue, and then we will not even know that there is a war. So the market does its own thing. The second point is, it's still a bull market. It's 16,250, and we started this leg of the bull market at 7,500. We are still double in 2 years. Nothing has gone wrong with the market. These sharp corrections are inevitable. They keep on coming, and they will come. What is the short-term possibility? See, 16,400 was a very strong support level, and that broke today. The next two support levels are 15,500 and 14,000. It's anybody's guess whether we will go to 15,500 or 14,000, or we may not go there. I don't even want to make an effort to make that guess. What I know is that at one of these support levels, the markets will stop falling and eventually build a base. This is a bull market, so at some point we must, as an investor, we should be buying. As a trader, there is too much volatility. It is best to stay away from the market for a few days, and then you will get many opportunities to enter. Well, this is the view for today. Please give me your feedback so that I can again make these videos more meaningful. Have a lot of fun. Enjoy yourself. Jai Hind.